Now, how does the buy-sell work? Let's say you got three shareholders in the company. They agree to do this buy-sell arrangement. So first thing they normally do is they need to sit down, agree on the way to value the business. About 70% of our clients, usually how they agree is sit down and just pick a figure. They sit down and pick a figure. You got no formula one. Okay? Because audited account they know cannot be loose. Okay, they smile at you when you ask them about accuracy. So they pick a figure, right? They agak with the building, okay, 10 million. Okay, okay, 10 million. Percentage share, then divide up. Okay, 10%, 20%, 50%. That's your value, right? So in the agreement, they will say next year, let's sit down again, do another review, see how's your business. Is it going to increase from 10 million or going down, reducing 10 million? If it goes up, okay, we will change a little bit, small part of the agreement to say now it's 12 million instead of 10 million. And then we look at the insurance coverage again, whether you need to buy more or not. Or do you want to buy more to cover the difference between the old price and the new price? Alright? Now, once they are okay with that, then the funding. Okay? How will the buyer buy the shares of the seller? Usually most clients will pay insurance because that's the cheapest way to do so. Okay? There are some clients who old can't buy, then we tell them, okay, the old guy can't buy, or the guy with health issues can't buy. Then the other shareholders, like for example, A cannot buy because it's old, don't qualify, or substandard health. When A dies, B and C have to pay cash. Okay? B and C will pay cash, usually the agreement will cover not one lump sum cash, pay by way of installment. Okay? Pay by installment of how many months at the end of the day. Something that both buyer and seller need to sit down and agree on the schedule of payment. Right? Late payment, there could be interest imposed. Default payment, there will be interest imposed. Even somebody will ask client, because he's paying you by installment, you're not getting one lump sum cash. That itself, do you want to charge installment? Do you want to charge percentage or not? So if they say yes, charge interest, then okay, fine. Then what's the rate of interest that you want to charge? Do you want to charge according to the Maybank BLR rate, or you want to fix your own percentage, or no interest at the end of the day? So clients have to agree on this at the end of the day when they do this. If they're using insurance, has the funding more to buy the shares of the seller, the way to do it would be director fee dividend. Okay, use director fee dividend. Okay, here, if you're using insurance, the insurance need to be bought in the personal name of the shareholders. Buy in your own name, not buy in the company's name. This is not a key man insurance. You all need to be buy in your own name, so that when the shareholder dies, his insurance money will be used to buy out his shares. Okay, the premium for this guy is actually going to be paid by the other two remaining shareholders who is buying the shares. Right? Okay. Right. So this will to facilitate the easy purchase of those shares. Right? We don't get the company to buy the shares, otherwise it will be against Companies Act, Section 67. Right? Now, only after the insurance has been covered, let's say, then the third thing is the agreement will come in, it will be drafted, prepared, together with the power of attorney that will be prepared, as well as their personal trustee. Now, each of the shareholders A, B, C, each one will have their own personal trustee. The purpose is to tell us, the trustee, how do you want the trustee to give out the funds? Okay, whether at one lump sum or over a period of time.
Azhar,
Yeah.
there's one question. Why do you need the PA at this stage? Because this thing won't take effect.
Yes, the PA is actually given to the trustee. The PA will be written there. The PA only, the trustee, being the donee of the PA, can only exercise the PA in such events. Those events tie up with the buy-sell events, death and TPD. Okay, we need this PA immediately so that it can register in court, have it valid at this point in time. It's just a matter of now waiting for see who dies first. Then we start using it for that guy, that kind of thing. Okay. Now, take for example when A dies. Let's say the trustee is notified of his death. Then there's death certificate, and if you're using insurance as funding, the trustee will go and claim from the life insurer that particular sum assured. And once that claim is successful, you will go into Mr. A's trust fund, because each one of them will have their own trust. Okay, that money will go to A's beneficiary, of course, whoever it may be. Now, if that money collected is full payment, then that's not a problem, alright? Because what will happen is that if it's full payment, the trustee will transfer A shares using the power of attorney to B and C as the purchaser. We don't have to wait for any court order, we'll just use the power of attorney to do the transfer, right? Pursuant to the agreement. And if there's a shortfall, okay, where insurance don't cover the full amount, that difference, this B and C would be paying the shortfall. The trustee will be the debt collector to go and chase them to make payment. And for all those payments received, all will come under, will go to A's beneficiary. Okay, this whole transaction, transferring shares, collecting insurance money, it should be about a month or so lah. It shouldn't be longer lah, because preparing Form 32A, it's not a heavy duty job. Making claims of the insurer is not really that difficult, right? Unless of course when the client buy the insurance that time, he hides some of his medical history lah. Right? When asked, he say no. Even though I promise, say no, I'm very healthy, and then you have to pay the issue. Otherwise, it's usually quite smooth sailing to the claim. Alright. The documents that we have for the buy-sell, the above usually will be four. You will have the buy-sell agreement itself, the life insurance if there's any, the power of attorney and the trustee. Each one plays a different role, right? To make this whole scheme work proper in the future. The agreement itself, when we do the agreement, it tends to cover these things. These are the major things. There are other minor parts that I didn't put down here. Like for example, how much you want to sell the shares for, the valuation method, the funding. Is it going to be by cash or by insurance or combination of both? Then the agreement will need to detail down all these things. When do you sell the shares? Okay. Death, disability, critical illness. If you're going to use TPD and critical illness, then if you're buying insurance, we will usually say, okay, the definition of TPD and critical illness will have to refer to the, what we call this, the definition provided under the life insurance policy itself. So that we copy and paste in a way that's for consistency purposes. And who's the buyer and the seller? Because when you've got three shareholders, A dies doesn't mean B and C want to buy. Sometimes A dies, only B wants to buy. Because C says, I'm a minority shareholder, I don't have so much money to buy. So exclude me out when A dies. Okay? So we can customize with the buyer and the seller, as you know. Okay? And then timeline for transfer of shares, where we look at, essentially we look at what we call this. This is including paying money for the shares and the transferring of shares. How long does it take? We also define that sometimes things like death. In the agreement needs to be clear when is the first day of the offer to sell the shares and the acceptance and the completion of the sale and purchase. So like for example, death, even though the partners and all that gone to this guy's burial, helped to bury him also, let's say, but so long as there's no notice of the guy died from the family, i.e. proof of death certificate, the offer hasn't taken place yet to sell the shares. Right? So the moment the trustee receives the death certificate, then the next day offer to sell begins. Okay? And then from that day, you have a timeline. When should the entire buy and sell of share for this person complete? In the agreement, it will be written down there. How many months or how many number of days or whatever. Alright? Okay? For disability, we also have to check. Because here, if it's buying insurance, usually the insurance policy will state when can you begin to claim for disability. If it's loss of limbs, I mean loss of two limbs, an arm and a leg and all that, quite clear cut, you submit, they'll pay you quite fast. If it's what we call this, when you're bedridden, then they usually have a waiting time of 6 months. So you are in that condition, so then the doctor will come and check and then observe for the next 6 months, see whether after that you're still in that condition. If you still are, Then the doctor will certify, tell the insurer, okay, most probably it's not going to improve. You can approve the claim. You can pay him at the end of the day. Okay? So the buy-sell will need to be in line with the terms of the insurance policy as well. Because the purchasers, unlikely they want to fork out their own money first. Okay? They usually want to wait for the life insurance payout, then only the offer is to buy is start, the time to run begins when the insurer approves that particular claim. All these are details. You can probably read it because I don't think I got time to cover so many slides. As you know, they are. Leave this out. Seller as well. I sell a bit. Yeah, then one of the things to take note is the buyer and seller. Sorry, the buyer of the shares. Are they going to buy the shares equally or proportionally? Because there could be 4 or 5 shareholders. One shareholder died. Each of these shareholders have a different proportion in shareholding. So one guy dies. The other 4 shareholders, are they buying equally this statement share, or they are buying proportionally based on their existing shareholding? So it all depends. It has to be written down in the agreement.